Yes. Hey, it's Mack with PriceActionTradingSystem.com, and we had a glitch again with the volume or the audio on the video, so I'm going to go ahead and, since I'm probably not going to do another one this week due to the holidays, I'm going to go ahead and redo this one. It's a little late in the evening here, but I'm kind of bored, so I wanted to come back and look at the chart some more, and then I realized there's no volume, so I'm just going to do another video. Luckily, I hadn't cleared my chart yet. Everything's still on there from earlier, so not that big a deal today. Hopefully I can get this. I thought I had this audio thing worked out, but I just occasionally we get no audio, and I don't know what the deal is, but I'm going to continue to look at it and hopefully get it cleared up because it's getting old doing the video twice on some days. But let's talk about the trades. A couple of things real quick. I'm probably going to start my vacation tomorrow for this Thanksgiving holiday here in the U.S. I'll probably start my holiday tomorrow and take off the rest of the week. So probably will not be another video till next week. But the weather's been kind of crummy around here. It's been cold and wet and raining and cloudy, and so nothing to do outside. So if I get bored, who knows, I may do one anyway. So if you see one, don't be surprised. But if you don't see anything, you'll know why, because I'm on vacation and just doing something different through the Thanksgiving holiday. But let's talk about the trades here. Before I get in the trades, I want to show something. I get this question a million times. People don't understand that when you're counting for second entries, you can count off both sides. All right, when you're counting, when the trend is down like this trend is down from here to here. And, you start trending down here, and we're trending down all the way down. You can see this channel. So you generally want to count off the bottom. First entry, pull back, second entry right there. But when you start trending this way, now you're trending up. Even though it's overall a downtrend, this is a temporary uptrend. So you can count off this new high. There's a new high here. So first entry short, pull back, second entry short. All a second entry is two. It's all about two legs. So let me move this out of the way. So if you get up here and you get a new high, there's your first entry or your first leg, your pullback, and there's your second entry when you broke below that bar, so your second leg down. That's all there is to it. It's that simple. I know it gets complicated. People try to make it more complicated than it is, but it's real simple, and you can count from either direction. And so even though this is a second entry right here counting from this side, if you're counting from the low, it's a first entry, second entry, it's a third entry counting from the low. But because you're starting to trend upwards, you can just flip-flop and say, okay, first entry, pull back, second. And we count it a little different off new highs and new lows. It's not counted quite the same. The first entry is just the first move. When it broke, like right here, you got a new low. When it broke higher right there, if you're counting this direction, that's your first entry. Then it pulls back right here and goes higher again. There's your second entry or your second leg up. So it's really just that simple. And here we are again. We're counting from we're trending up now. So you got a pull back, a first entry long, a pull back, and that's a second entry long when it broke higher right here when bar 74, that's bar Sim 1, Sim 2, Sim 3. Yeah, that's bar set. When bar 74 broke above bar 73, that was the second entry long, counting off the highs. But if you're counting off the lows, that's the first entry, because that's the first move after a new low right there. First entry pulls back, and it goes higher when bar 30 right there broke above bar 29. Or I guess that's 81. I'm sorry, broke above bar. So when bar 80 broke above bar 79. That was your second entry counting off this side. If you're counting off the high, it's first entry, pull back, second entry, pull back, third entry. So all we're doing is we're counting from either direction. And generally, when you're going down, you're interested in counting off your lows until you start trending the other way. So when you made this new low and you start trending higher, then that's when I'm interested in counting off the high, because it could continue to go higher. In other words, like right here, it just continues to go higher. And so we're counting off the highs, and then suddenly you get this little congestion area, and this right here is, you got a new high, you pull back, you get a first entry, you pull back, and when it broke below that bar, it's a second entry counting off that high right there. And again, you count it a little bit differently when you're coming off a new low or a new high, because the first move up is the first leg, or the first move down is the first leg, then the pull back, then the second leg. So I hope that makes sense. I continue to get that question over and over, and I think people just try to complicate it, and they don't understand that you can count from both directions, and you also count just slightly different when you're counting off a new high or a new low like that. Like right here, this is support right here. So we're interested in getting a second entry. You don't want to take the first entry or the first move off the low. You want to wait for the second move, and that came right here. You could take the first move, but it's a little bit more aggressive. And right here, you could have taken the first move up here, but it's a little more aggressive, so wait on the second one. Even then, it's still aggressive, which we'll talk about that when we get there, as to why that was the case. So let's talk about the trades and then wrap this thing up, and I'm going to hopefully maybe call it quits for the week, so we'll see. But we're trending down here. We suddenly pull back, and if you're counting off the lows, you can count this either way. You can count a double bottom, can be counted both ways. So in other words, that could be your first entry and that's your second entry, or because this is equal, you could count this as the new low. There's your first entry, pull back, and then your second entry short. So you can count them either way. If you see a good setup off the second entry counting this is the new low, take it. If you'd have taken that second entry right there, you would have had to ride this out, but it still would have been a good trade. So, but I usually like to, if it's real congestive like that, I usually count this as the new low. So first entry, pull back, that's a second entry short, counting off that double bottom, counting that as a new low. Or it could be also a second entry, counting off this new high because we're trending higher here. Count that as a new high, the count 0. There's your first entry or your first leg down, then your pullback, and your second entry or second leg down right there. So that's a second entry, break below that bar, counting from either direction. Or if you started over here, it would be a third entry. But the biggest thing is it's a double top up here. We're making new highs here, and you're kind of trending the other way, so we're kind of just switching gears and looking for the second move down off the high, which comes right here when we broke below that bar right there. That's bar 17, 18, that's bar 19 right there. When prices broke below there, it was a second entry short, counting off that high or that low. Didn't matter how you count it, you get the same thing. And so I drew that one in green. It's a little more aggressive because it's congestion right there, but that's only because you're running into this resistance right here. This is a downtrend channel, and it's an easy scalp all the way down. And you could have used a limit order here. You might have missed this trade. I don't think it backed up. I think it broke on down and kept going. So if you tried to use a limit order, you might have missed on that one. Then you come up here and guess what? You make another new high. So because you're kind of swinging higher and making higher highs and higher lows here, I'm going to switch the count to this side. When I get a second entry off this top, I'll probably take it. There's your first entry, your pullback. And when it broke below that bar right there, I'm going to move this real slow so you can see it. That's bar 33. When prices broke below that, that was a second entry short. Now this one you might have used a limit order, and you see it came back over here, and it would have filled it all the way back into about halfway into that bar. And the reason being is because there's congestion there. But you can't afford to get in way down here because you're getting too close to the lows, so you just about have to use a limit order on that one. Even if you used a stop, it still worked. And you were expecting prices to try to make a new low here because you got a trend line break. This is your channel. We overshot it to the low side, and that was your first clue that it'd probably break higher over here and break your trend line or your little trend channel working out through there. And then you bounced a couple of times and it turned back down. That's a breakout pullback short. It's really just another two-legged pullback. I didn't like going short in there. I probably should have circled that in lavender. It's just too congestive. it's too close to this support down here, and there's too big a chance it bounces. You really got to wait on a breakout pullback short, and you never got that. It just went straight on down. But then you got two pretty much measured moves, legs down. There's leg one, and then you got this little swing here, and then you got the next leg down, and it's almost a perfect measured move. There's maybe an extra tick, and you might have even measured from there. Either way, you overshot it. You either overshot it just a little bit, or you came up just a little bit short. But that's really where it started lower again. So leg one and leg two, and it missed it by maybe a tick there, it looks like. But you never got a breakout pullback short, so no other chance to go short, and I just think it was too dangerous going short at those lows right there. I'm much more apt to go long up here than to go short down here lately, because the longs are the ones that seem to succeed because the overall bias has been up on the bigger picture. You could have bought down here because you got your two measured legs, and so you could have bought down here. It's a little bit aggressive, but you had your trend line break. You had 1-2 legs down to a new low. Odds are it's going to come back up and test this breakout area at the very least, and you got plenty of room. So I liked going long there. Again, it is a little aggressive because it's the first entry. You might have waited on this little doji, and then when it broke above it, you could have gone long, but then you don't have as much room in there. So you really have to, what I did was when it broke higher, I dropped a limit order a tick in, and it did come back and fill it. And then you get one extra tick, so you don't even have to, you got plenty of room to get out before you even get back to the EMA, much less back to the breakout area. And then you start making new highs, higher highs and higher lows. So we're headed up now. So one leg, let me get this out of the way. Look at this two-legged pullback, back to the EMA, back to test this area right here, back to test the trend line. And it breaks higher. That's a second entry long. Again, it didn't close on its high, so I'd probably use a limit order here, and you see when it broke higher, drop your limit order in, and you could have got filled all the way back to 1802 right there. And maybe 1801.75, but definitely 1802. And then it starts higher again. It doesn't go very far before you get the break of the trend line, but you would have been able to scalp out, so no runners. Now, if you took this aggressive trade, you got runners going, and you could have ridden them all the way to the highs. But if you entered here, you don't get any runners because it's not nearly as an aggressive a trade. And you get your trend line break, and because you're moving down and we're retesting the low area, I'm not going to take the first move higher, even though it's a second entry counting off the high. I think it's too dangerous. You wait for it to come back, and if you end up with a double, triple bottom, look how many times we tested that area and bounced. So you got a newer low right there, then this little low right here, and this low. So it comes back and tests it, and then it pulls back and tests it again. And so when you break higher there, you want to be in there because you got everybody trapped. And you can see that was a trap because look how that thing took off. And what happens is all the shorts, all the new shorts piled in right here, not because they're not aware that that's strong support. They're not that smart. They don't see that. And they're thinking that we're going to go lower again. You got to be aware of what's happening here on this chart. And you got to be aware that you just had a channel working up, and that's your first break of it. So you're going to get a retest of some kind. So it breaks higher. It goes lower first, so it brings in all those shorts. And a lot of these longs also exit because they think that it's going lower. They're not smart enough to know that they're going to try to trap people. And so it traps out the longs, and it traps in, and it triggers new shorts. And then suddenly it reverses, and all those shorts realize, oop, I got tricked, and they start exiting, and it starts rocketing up. And then all the people that got tricked out all along realize, oop, I got tricked, and they start jumping on, and look at that move. That's how that right there, that move, that's what caused that. And, I can remember when I first started trading, I would see, the market just doing nothing, and all of a sudden it just rockets off. I'm like, what the heck? Why did it do that? The reason it did that is they trapped people. They fooled them. And that's your first sign that you got a good trap is all that movement up there. And that's because all the shorts are covering, and all the trick longs realize they got to buy back, and they start buying back, and it just accelerates the buying. and it overwhelms all the sellers, and off it goes, and it just rockets higher. And you can see where the smart traders quit buying right at the high there, and suddenly it can't go any higher because they're all taking their profits. And then you get a bunch of dummies that start buying in here thinking, oh, I got to get long again, and they get trapped out again right here. And then it takes another move up. And you don't want to be getting, you got to be careful right here because of all this congestion, all this overlap. There's 1, 2, 3, 4, 5, 6 overlapping bars. You might have thought about going short there because it's at this overnight high, but there's not a very good setup. If you go short right here, by the time you get in, prices are already almost back to this low right here and this EMA. And so you gotta wait on this one. This one's, I don't like this one going short right there, and mainly because there's a bias to the upside. So that we talked about earlier, we're more apt to break out, and plus we failed out the low side. The odds are we're going to fail out the high side, or at least break out the high side. So that's why I didn't like going short there, and that's why I drew that in the lavender. But because you didn't go short, or even if you did when it turned back up there, you had to realize that, hey, they trapped everybody. It's just a two-legged pullback to the EMA in a market that's trending higher. We don't have a measured move, most importantly. Let me show you this. There's your first leg up, and then there's your measured move, and you see we missed it by, we went one tick past it. So that's another reason to be thinking, hey, we haven't got a measured move yet. I got to be real careful going short here. And then it turns up, you go long right there, boom, and off it goes. And if you get tricked here, the only thing you can do is exit when it turns up. And by exiting right there where it turned up, you at least end up with a tick out of that short right there. No harm, no foul. But if you hang on to see what happens, you probably get stopped out only to see it end up going right back where you thought it was going to go to begin with. Then we go higher, and we just kind of got hung in this little tighter range up here. So I didn't like anything up here other than this short. And then even then I thought it was aggressive because it's congestion, but it's at the high side of this little range, and you're looking, let me show you here, you got one leg up, a little two-legged correction, then your second leg up, and then it pulls back and then tries to go higher again and fails, and so there's a second entry short counting off that high right there. First entry is when it breaks below bar 111, 111, that's your first entry. Then it turns and goes back higher, and then it turns down again, and when it breaks below bar 112 right there, that's a second entry short. An aggressive trader's going to take that trade, knowing that we're probably going to have a failed breakout here. This thing should have gone on higher if it was going to go higher. When it kept hanging around here, prices just can't seem to go higher. And that's generally an indication, just like when they couldn't go lower in here, that they were going to go higher. And you don't know that it's going to do this, but that's why you hold runners. And you notice the two most aggressive trades today, this trade and this trade, were the ones that got you runners, and this one. And this one's not aggressive because you took the second entry off the new low. Your first entry was right there, it pulls back, and then your second entry was when it broke higher there. And so you get up here, I'm going to show you this one more time. You got a new high right here. It comes down, this bar closes, it breaks below it on the first entry, then it tries to turn back up again, it finds resistance and turns back down and closes, and when prices broke below that bar right there, that's your second entry, and look at that thing. Off it goes. And again, you don't know that it's going to do that, but you take the trade and you hold on to your runner, hoping that and then it happens, and you get it. And those are that trade and that trade are the two best trades other than this one. And the only reason this one worked so well is because they had everybody trapped to the short side because they don't know any better. They aren't drawing their trend lines. They don't understand the rules. They don't understand how prices work. And this is so predictable. Is it easy? No, it's not easy. You got to learn it, but once you learn it, it's not that difficult. But it's really, really predictable. It does this over and over every day. I can go show it to you I do show it to you Go back and look at our 400 and something charts, and I can show it to you happening over and over and over and over. But you got to get your mind conditioned to understand it and then to believe it. And you know, it's amazing how many people I can show this to, and they know it, but they can't force themselves to take the trade because they're scared. And so you got to not only condition your eyes and your brain to see it and feel it, but then you got to condition yourself to have the fortitude, the intestinal fortitude to take the trade. You know, it's amazing how easy it is to go short right there, but then how hard it is to go long when the odds are it's going to bounce right there and go higher. But yet every fiber in you tells you should be going short right there. But that's the whole idea, is to trick you and get you to enter the wrong way so they can make that move happen. Notice how they couldn't get up there right there. They were fighting. They couldn't get up there. Okay, we'll let this thing sell off, and we'll let them think that it's going to go lower, and then we'll trap them, and that trap will run this thing higher. And guess what? That's exactly what happened. So you got to be thinking like these guys think. You got to be thinking, if I can move the market and I can't get it to go through here, what have I got to do to get it up there? I got to create a trap. And that's what they do right here. They create a short trap, and then boom, the momentum of that trap not only takes it up there, it takes it up there in a split second. See how long that move took. That bar opened at 11:06, and that one closed at 11:21. So, you know, it took maybe 10 minutes or something. And that's it. And it took probably from here, 9:15 to here, it took an hour and a half. Actually, to here, it took almost 2 hours. And then all of a sudden in 10 minutes, it makes that whole move. That's a fast move for a day that's that slow and that low of volume. Same thing right here. This move happens from 14, I'd call it about 14:43 to 14:56, about 13 minutes, that whole move, where coming up it took 11:02, about 3 hours. So you can see the difference there. But I hope all that makes sense to you, and I hope that's clear on how you count the second entry. Just remember, you can have a count going from both directions. It's not that complicated. If you haven't done it much, it probably is harder to figure out, but it's really pretty simple. People just don't quite understand it, and they don't quite, it's hard to describe this stuff. It really is. I mean, it's really hard to describe it. And so it's, you know, it's much easier to show you, but then when you're not understanding it, when I'm showing it to you, then it makes it even harder. So just remember, you're working down here. So this is strong support. So any move off that strong support is your first entry. First entry is right there. When it breaks higher, then it pulls back, and the next time it breaks higher is right there. There's your second entry. That's where your trap triggered. Then you got 2 legs back. Pull back. There's new high. First entry. Pull back, second entry. New high. Pull back, first entry. Pull back, second entry. But you don't want to be going long up here at these highs on the second entry. Then it pulls back and there's a third entry. But you got a new high right there. So first entry short, pull back. So that's really was almost a second entry right there. But it did make a slightly higher high. So that's a first entry, pull back, second entry. So I hope all that makes sense to you. I'm going to wrap it up. We got another 24 minutes worth here. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.